Hi, welcome to the market alert for Thursday, the 13th of August 2015. And starting off in the 5-minute chart, in the pre-market session, prices, as we saw, were hit hard with the Chinese devaluing the yuan for the second consecutive day, and then prices drifted lower down to the 17,200 level before finding a bit of support in the pre-market session, and then coming back around 100 points before failing again, and then the market opening up and selling off. We had some support at the 17,200. The market tried to hold, but was then marked down on low volume, which indicates that the selling has disappeared. And then the buying started to come into the market across the Nasdaq and the S&P, and of course this pulled the Dow to the upside as well, which is why you're not seeing any green bars in the Dow, because all the buying was in stocks related to technology and in the broader S&P 500. But we had the PTI there at the bottom of this move, and we see the market coming up. There's 34 points profit in this trade. You see the market coming back then to the 17,150, and then it just continued to move higher. Now, we didn't get any signals on this part because we're into the what would normally be the quieter part of the session. But during yesterday, there was a buy signal here, a buy signal here, and one here as well. If you actually take off the settings for the times, I'll just show you this. You're taking out the primary times, and also you'd have to remove the PTI. If I just scroll this down a bit, apply outside, just remove that, and there you go. You can see the buy signals there as the market moved to the upside. But of course, what we've been doing, because the market tends to go quiet during this period, is to actually leave these out. But I just wanted to show you that the signals were there for the second part of the up move. So let me just put this back. So the market's moved higher, and this picture is very interesting in the daily chart. Now you see very high volumes with a test type bar. The market's being forced down, it's been tested, and the buyers have returned to the market. And this is why you're starting to see prices move higher on the overnight as well. As I've said before, the market, or the Federal Reserve and the US government, do not want this market to go down. It is the last remaining vestige of the illusion that everything is fine, given the amount of money that they've printed to hoodwink the general public into thinking, or the voters into thinking, that everything is fine in the economy, and it is not, because crude oil's on its knees, 13-year lows in commodities, etc., which I've spoken about before. So what they're doing is trying to bring the market back to the upside. So from this point, I would expect to see some sort of up move. And one thing you can do is actually take 100% extension from the annotations there and draw this in. Now, if the market fails to close above this area or trades up to this area with no new professional buying, then you're likely to get another turn and move back to the downside. In between all of this as well, you've got the high of this selling bar, where the selling came in on Tuesday as well, and then the high of the bar next to this as well. So watch the market as it comes up towards these areas, which it's likely to do. That said, of course, the long side will be the best side after a shakeout to the downside in the intraday chart first. So if the market's marked down just after the open and then you get potential buy signals, then the buy side is likely to be the better side. Doesn't mean to say you can't take the short trades, but be warned with this background information here that it may just get to the entry price, turn around and come back, or around 15 to 16 points profit on the table before reversing and coming back as well. Because at the moment, as you can see from this price action, the highest volume bar we've had for a very long time in this chart, as we move the chart there. So we've definitely got some sort of intervention in the market here, with some either short covering or a combination of short covering and buying coming into the market. So that's something just to make you aware of there as well. In the news, what have we got today? Anything at 3 p.m? No, we've got the Greek vote out at 10:03 odd time, but that's after the market's close, so it shouldn't be too much of a problem. And also, just a thought as well, yesterday, of course, they wheeled out Dudley from the Fed to talk about pumping the market up, and also he's still talking about a rate rise, which is never going to happen, not since China have devalued their currency, because all it's doing is increasing the value of the US dollar, and then the interest rate cut, as I said yesterday, increase would actually improve or cause the US dollar to rally as well, which is the last thing they need at the moment because it's having an impact on exports. And finally, let's have a quick look at the implied volatility. 1353 up slightly for yesterday, and again seen in the chart, very narrow range at the moment given the extent of the range of the market. So again, very, very odd, because normally you get these sort of sharp up moves that you see here when you get the down move in the underlying market. So something very strange is going on here. A very narrow range on the implied volatility. Why, I do not know. But I'm sure all will be revealed as we go forward. Right, that's it from me. I will see you in tomorrow's Market Alert. Have a good day. As ever, thank you for your support and also for watching. See you in the next one.